The board of the Central Bank of Armenia at its meeting today decided to reduce the refinancing rate by another quarter percentage point, setting it at 8%. Mr. Galstyan will share with you the communication, followed by Q&A. Thank you. Thank you. At its meeting today, the board of the Central Bank of Armenia decided to decrease the key policy rate, setting it at 8%. In the session of the June 11, the board of CBA decided to decrease the key policy rate by 0.25 percentage points, setting it at 8%. The board agrees that the low refinancing rate is necessary to continue to meet its price stability objective of ensuring an inflation rate of 4% over the medium term. In the Q3 of May 24, the 12-month inflation continued to remain in negative territory, registering 0.3% in May, and the core inflation continued to remain in negative territory, minus 0.5%. In Q2 2024, risks of slowing economic growth globally and in the key trading partner countries of Armenia continue to persist. Global inflation continues to decline, but sticky prices continue to remain relatively elevated in key trading partner economies. At the same time, overheated labor market conditions continue to contribute to sustained high demand conditions in key trading partner countries. Geopolitical tensions in the Middle East since the beginning of the year, as well as growing tensions in international trade relations, continue to create risks for future growth in global commodity prices and potential disruptions in global supply chains. In this context, it is likely that key trading partner central banks, and in particular the US Fed, would maintain tight monetary conditions for longer. Consequently, weak deflationary effects from the external sector on the Armenian economy would persist. Economic activity in Armenia remained robust in the second quarter, continued to be largely driven by meaningful growth in the construction, trade and industry sectors. The latter continues to be impacted by certain short-term factors, posing significant uncertainty with respect to the sustainability of economic growth and its long-term outlook, as well as the strength of domestic demand and consumption conditions. External demand for domestic services continues to slow relative to 2023. At the same time, risks for modest demand pressure stemming from fiscal policy continue to persist. The inflationary environment in Armenia continues to remain low, driven by the monetary policy, aggregate demand conditions, and deflationary pressures from the external sector. In the face of high uncertainty, given its commitment to achieving the price stability objective, the board considers multiple scenarios during its deliberations. On the one hand, the board discussed scenarios where possible underlying developments, including persistent tighter monetary conditions in key trading partner countries, as well as uncertainty related to the country risk premium and neutral interest rates, require a higher path for the policy rate relative to current market expectations in order to manage risks that threaten the price stability objective. On the other hand, the board discussed scenarios where potential economic developments, including the risk of weaker demand conditions, given certain structural features of economic growth, would cause inflation to persistently remain at low level. This would imply a more rapid and aggressive downward path for the policy rate than what is currently priced in the medium-term horizon to sustainably bring inflation back to target. In summary, balancing the aforementioned risk, the board of Central Bank of Armenia finds it appropriate to continue to gradually ease the policy stance. The board will continue to monitor risk scenarios and is ready to take adequate actions to ensure that the price of stability of 4% inflation over the medium-term horizon is met. H2. Mr. Galstyan, the disaster in the north, how can it affect the general situation, and what are our rates in agriculture? Frankly speaking, this morning at the board session we talked with our partners from the Ministry of Finance to get an understanding whether there are any estimates about the volume of the disaster and its possible financial impact. The partners in the government still do not have final estimates in order for us to accurately evaluate the damages and to understand what would be the response to the disaster in terms of public finances. One thing is obvious, that the disaster is pretty large, and when we talk about substantive fiscal risks, that's exactly the episodes we have in mind. The government may increase the expenditures, and that would allow us to expect that the fiscal signals may shift into a positive zone. If I'm not mistaken, only there are 53 segments of the highway that has been washed out, and there are more than 20 bridges. At first sight, in and of itself, this is already tremendous, not to mention the damage to houses and households of natural persons and their cattle. Yes, of course, we will discuss those issues as well in order to gain an understanding of what needs to be done. If they have borrowed, if there are businesses or natural persons, what would be the proportion? Perhaps the banks may somehow contribute and take part. There is a lot to be discussed, but we need to have some more certainty to make it substantive. Thank you, Mr. Galstyan. I have other questions. Let's start with inflation. I heard your preamble, and I have the printout. When there is inflation, the society is not happy and expects policy interventions to contain inflation. And now we have the opposite situation. It's minus 0.5% and 0.8. I was told about 0.8. Inflation may be estimated in different ways. The one that we target is the 12-month. That is this month over the previous month. Over the same month previous year, it was 0.3. We have negative inflation. So what's your observation about the economy, impact on the economy? The high inflation impacts the solvency of the population, whereas the low inflation already impacts the economy and makes businessmen work harder. Do you have any signals emerging from the economy that they're not doing well in popular terms, and there is a need to contain the negative trend, and in which time frame do you intend to bring it back to 4%? Thank you for the question. We already have inflation in the positive territory. It's above zero. By the end of the year it will be somewhat higher, and we will get close to 2.5, 2.2, depending on developments in the agriculture. That is, our inflation will be close to lower range of our target. And there's two important factors here. When the central bank make projections about inflation being higher, the central bank plans in mid-term to bring it back to target. Why do I emphasize mid-term? Because if we target to bring back inflation to a 4% target within the year, that we can do. But the cost for the economy, both if it's below or above 4%, may be too high. Therefore, the central bank tries to implement a smoother policy, refraining from abrupt steps. In those years when the inflation was very high, you may remember, for 2 years running we had very high inflation, as almost every other country in the world, in view of overcoming the wake of the pandemic, and we had some idiosyncratic. We did not increase the rate drastically. We consistently increased it, but did not target to bring it back to target in 21 or 22. We do the same now. We do our best to combine the target, to strive towards the target considering other factors. When we get closer to 4% in midterm, through the next year, we will already get there to the level of 4%, which is reasonable following 2 years running of high inflation, getting close to the target. We had 8.8, if I'm not mistaken, 1 year, followed by the subsequent year. I'll look it up and tell you. In 2020 we had 3.4, no, 3.7, I apologize, followed by 7.7, and another year 8.3. Through last year we had minus 0.6. This year it will be in the positive territory, and in 2025 we'll get the target. What about the first part of my question? Any signals from the economy that you received in view of the low inflation, and how did it impact the economy? There is a list of goods that you estimate the inflation with. So although we see a negative number here, specific, for example, HoReCa and hospitality business is still experiencing high inflation. Even tourists compare it with European countries and claim Armenia has the highest cost of living and eating out. I noticed within the recent years that coffee got very expensive. Did you factor it in, Mr. Galstyan, in your indicators? 100 or 200% inflation in coffee prices is observed. It's the statistical committee that sets the composition of the basket, and they measure it. We are not doing it in their stead. That would not be fair. They determine the content of the basket through some certain averaging and approximations. My consumption basket may be quite different from others. You cannot go into 3 million people's individual baskets, which is why, to ensure certain representative nature, they average certain things out. In this respect, I assume the question about the tourists pertains to forex fluctuations as well. Forex inflation may be higher. The Armenian dram within the several recent years has appreciated, which is why their feeling about Armenian prices differs. For local consumers, it's a different picture. That's what I'm saying, and I apologize. It's not only that. When we go as tourists to other countries and compare it with Armenian prices, the same restaurant prices, there is truly significant increase, and the coffee increased multifold. It's the same phenomenon whether you go out or they come in. It still boils down to the exchange rate. When Armenian currency appreciates over euro and dollars, for us, foreign countries become cheaper. I think there may be businesses that may encounter difficulties both with respect to the exchange rate and the low inflationary background within the last 2 years, but it's important to understand that the inflation is not annual, it's a long-term phenomenon. Planning horizon has to be stretched longer. I understand it's important to plan for every year, but in terms of long-term prospective planning, we cannot keep it for every year running, for reasons that I explained, which is why we believe that we are reasonably approaching 4, and that's the proper policy. When the inflation is low, and it's a global phenomenon. You create macro stability where businesses get ready to invest. In countries where inflation is high, we have a neighbor where it's 60% plus. There's not only political, the leading party, I'm referring to Turkey. In Istanbul, in Ankara, in the local elections, when they did exit polls, the main reason for the ruling party to lose was inflation, because it becomes costlier for people to, and the planning horizon becomes problematic. In the morning it's one price, evening same day, a different price in the same shop. It shifts the logic and psychology. It's very important from macroeconomic stability perspective to have stable and mid-term appropriate target for inflation. No mic is used, no microphone. I do not believe that for authorities or for anyone else this is important. I'm saying that from the perspective of economic processes, from the perspective of businessmen who are the locomotive of the economy under any government. For them, predictable inflation is important in terms of investments. There's another phenomenon. If we let inflation be consistently high, sticky prices of services and wages included, the same businessman will be continually having to pay higher wages because people have to be compensated for the inflation. Since we talked about businesses, I have two questions. One pertains to the turnover tax. Businesses submit their estimates about it making their services more expensive. Do you have estimates? Do you share the concerns of the entrepreneurs that this will lead to higher prices? And could you tell us, is this adjustment reducing refinancing? What were the factors behind it? We know that there is high season for tourist inflows, agricultural produce actively is harvested, but we have an issue with agriculture this year because the weather, according to the farmers, has damaged most of the crops. So what were your calculations? Our decisions are determined by fundamentals. I could mention several. It's the world food prices, which persistently have been low for years on end. Secondly, it's our domestic economic demand. We see that domestic economic demand is weakening substantially over previous years, whether in domestic or external. And in this respect, since inflation is mostly managed by demand factors rather than supply factors, which are sporadic. This year they may be a problem in agriculture, it has an impact, but next year it's no longer there. Whereas the demand can persistently impact inflation, which is why we pay more attention to demand factors. And the weakening of demand, the international prices give us space to adjust the rate downwards. And the first question about the turnover tax, this has not yet been approved, so it's hard for me to say what will happen. Let's see how it goes after it's enacted. I really don't know. We need to do an analysis, see what part of the entrepreneurs pay turnover tax. I don't know. I don't think it will be substantial impact. It's 0.3 inflation now. Our target is 4, so let's see how this will impact it. I always ask this question: as soon as you reduce the rate, will it affect the average rate? I've heard, and I remember your answer every time, but in the past it was 11-12%. We went down to 8, and the 8 is significantly different over previous months. Will it have a substantial impact on loan interest rates, banking loan? Our interest rate is just one component in that equation. In issuing loans or in purchasing T-bills, the banks consider the risks associated. The more the uncertainty, the higher the risks. In this respect, our country within the recent years has continually been encountering uncertainty risks. Do we have the slide on inflationary expectations? During our most recent survey of inflationary expectations, the respondents reported that the uncertainty has increased. When we ask them, what are your inflationary expectations? Do you expect higher or lower inflation? The number of those who expected higher inflation has significantly decreased, but the uncertainty component has increased. The respondents saying that we do not know, it's not clear, there's uncertainty. So the higher the uncertainty, the more the economic agents have problems in their decision making. The economic agents, not only private businesses but also banks. The banks, I assume, in determining their interest rates, the risk premium that they charge against uncertainty is kept at a certain level. We see that the returns on T-bills have gone down during that 11-12%. During the 11% inflation, the return on T-bills was the same 11, whereas it's now below 10% at certain points in the returns line. When will it reflect on the banking loan interests? Hard to say. As of this point in time, the consumer loans increase. In the phase following the construction, there needs to be lending to furnish the apartments in question. But in terms of business loans, it depends on how the business, the extent to which the business is inclined to take loans or borrow, what's the risks involved, and what are the interests that the banks will be ready to lend at. What's your rationale for low inflation? And if I understand the logic of reducing the refinancing rate, I assume one of the objectives is for the banks to proportionally decrease their loan interests. If the citizens will borrow more, it will incentivize consumption, and that will incentivize increase inflation. I'm not an economist, but that's my assumption. So if you decrease the refinancing rate by X points, the banks should also follow suit, so that I, as a consumer, will be interested in taking consumer or other loans at lower interest to take care of my needs, if I got it right. In the classical terms, the transfer mechanism works the way you just. We determine short-term price. Our interest rate is a 7-day interest rate. The bank add to it their risk components depending on loan risks, on the terms. As a result, the market credit rate. The lower the price of money, the short-term interest, the banks have more room to lend at lower interest. That's the classical scheme, but we're somewhat different from the classical landscape, especially considering the geopolitical permutations. It's very difficult to immediately translate the short-term money price to a long-term one, because lots of risk factors have to be considered. So the word proportionate would not really stick here, because when we increased from 4 to about 11%, increased it by 7 points, the mortgages did not increase by 7%. They increased by 1.5 to 2%. So this proportion didn't deliver upwards, so I assume it will not materialize downwards. As for the factors and the rationale for inflation, I already answered it when I responded to Hermine. It's the international commodity and food prices which are getting lower, and it's the internal and external demand in the Armenian economy, which we observe the demand is not as strong as it was in 22 and 23, which allows look and internal domestic. After 12 and 6% of economic growth, we'll have somewhat lower economic growth this year, and it translates into less income, less expenditures, which impacts positively to keep the inflation low. Use the mic. Which sectors experience the slowdown? Our observation, there is a certain activity in construction, in services, but these activities are lower than previous years. This is the breakdown of economic growth: 17.3% industry, 4.4% agriculture, 12.4% construction, services and a mere 2.2%, whereupon in 22-23 the services VAT was much higher, experienced much higher growth rate. So if you say it did not increase proportionally, so you raise it, the banks don't raise it proportionately. Therefore, there is a time lag. So if you reduce it from 11 to 8, how did it affect the operations of the banks and the interest they charge on loans? Do we feel it at this point? I believe not. But provided the events unfold along the positive track and we keep reducing the rate and the uncertainty is removed from the economy, there is room for loan interest to go down. There is a second component to this. The banks are funded by the attracted deposits. So the average citizen or businessman in Armenia, are they ready to finance the bank, to give money to the banks for 6%, so that the bank lends it at 9-10%? The purpose of reducing is to incentivize to a certain extent a process that will lead to what you're saying, but there are ancillary factors in Armenia and in the region that impact it adversely. We're trying to push the economy through those channels towards more active stage, but there are also geopolitical and other factors that are of utmost importance. The uncertainty you refer to is still in Armenia. Is it determined only by geopolitics, mostly Russia-Ukraine war, or others? Armenia, Azerbaijan, Russia, Ukraine, the limitation, demarcation of the border. When you talk with international investors, the press they're perusing, domestic or external, they do not get any positive signals from the press. They get signals about tension, about this, that, and there is no investment flowing into the country in those conditions. There is relatively peaceful situation now. There is certain peace regardless. So the uncertainty that there may not be peace tomorrow or the day after, and those signals by the media affect the investors. Imagine, hypothetically, you're a German investor sitting in Munich or Berlin, and you scan the Armenian media. You can place your 1 million euros in Armenia, in Montenegro, in Georgia, in Serbia or Argentina. No mic. They do it somewhat differently. Mr. Galstyan, this new methodology that you use in adjusting refinancing rate, you mentioned you will be discussing it with experts of financial markets. How do they perceive it? Did you have those meetings? Did they perceive your policy. For example, today's adjustment, is this under the optimistic scenario or the pessimistic one? Let's not call it optimistic or pessimistic, let's call it market expectations. That's the red line on the chart. The market expects the red line trajectory, persistent reduction. So we make our judgments about the policy rate in the scenario B. Case B is the economy shrinks faster, but the board discussed also cases where it could be weak demand, which assumes that we'll have to reduce the rate faster to restore the economy or to galvanize it, which will help us to bring back the inflation to the target. In case A, it's the opposite. We believe that in Armenia and elsewhere in the world there may emerge factors that will make us not to reduce the rate but to increase it. And the board, between these two groups of cases, identifies the ones that may have an impact on our current stock of risks or the one that may emerge down the road. A certain decision is taken to strike an equilibrium and understand where the risk may materialize. Let's hypothetically imagine there is a situation where the economy weakens in Armenia. As a result, there is a fall in prices, and we were proposing for the inflation to go back to the target. Doesn't work because the economy shrinks faster than we expect. It would be natural to decrease the interest rate faster than the market expects, following the blue line. But we're not isolated from the rest of the world, and if we pursue that policy and the Fed does not reduce the interest rate today, their rate is 5.5. If we reduce it from 8 to 5.5, on par with the US, and you look at it from the investor perspective, they can invest at 5.5 in the US, and they can invest at 5.5 in Armenia. We may encounter a situation, Hermine Can, when the international investors would prefer the US of A, and there would be a great outflow of capital from Armenia. As a result, our interest rate will spike, the inflationary expectations will be de-anchored, and we will have very high inflation, which would make us follow the orange line, which implies a higher interest rate to contain the potential inflation. So combining those cases, although we understand that there are B-type risks of slowdown, we cannot and did not want to reduce the interest rate to the blue line case, because the risks that may be emerging through that may rapidly lead us to the yellow line, which is why we prefer it to be closer to the red one in our behavior. Did I succeed in explaining it? Where did it take you? We do not look at the political. Where do you look? We do not look at politics at the political. The political component was not discussed at the board. We discussed policy, not politics. Fiscal policy, for example, there was a question about the disaster or about the displaced compatriots from Artsakh and the expenditures of the government. What would happen if the government starts those expenditures, which will mostly be social in nature? In this case, our current expenditures will arise, the fiscal signal will become positive. As a result, the policy rate trajectory will follow case A. Let me fill in about the cases. Today at 6 when we publish the monetary policy report, All of the scenarios that the board discussed will be there. These were just two cases. The full report contains the entire range of scenarios that the board deliberated. You will find there also politics. You will see Mr. Galstyan already mentioned that the discussions deliberate. We share the full discussions of the board so that you see how they deliberated. And about the second question, switching to this new system of discussing the rate with various financial experts. You've taken part in our discussions with the media where we presented it on the same day. We also shared it with the analysts and experts of the banking and finance sector. We continue on a weekly basis to discuss it with reputable experts from the UK, USA and other countries. But for the future, closer to the end of this month, we will have a broader technical discussion with the analysts of the banking and finance sector, more with an emphasis on modeling. And from September onwards, after the next big policy cycle, around 12th of September, we will have a streaming open discussion, open technical discussion about the cases and scenarios with the financial system and the expert community, and that will become a regular 4 times a year event. After each monetary policy report, we will hold a discussion with the experts and analysts. Thank you. And let me also fill in John. We discussed this with international academia and central banks. This is an innovation. We may be the first that have adopted this approach in the world. So during these discussions, the participants, for example, if we look at last publication by Bernanke, who was now retained by the Bank of England to assess the Bank of England's monetary policy quality and submit improvement recommendations. If we look at Bernanke's report commissioned by the Bank of England, it's very close to the approaches that we've been attempting to implement for 2 years already. So I believe that we're on the right track. The world is so non-linear and convoluted that one base case poses more risks when you use it to describe it. Off the subject about the Ameria bank transaction, I never had an opportunity in the wake of the discussion. What's your assessment of selling Ameria Bank at $306 million US, whereas its annual income over the last 2 years was about 60 billion drams. So 2 years combined, it's give or take the same 306 million US, the 2 years revenue. So do you consider it a successful transaction? And there's information circulating in the media about the shareholders, Turkish or whatever. If you think it necessary, you can reflect on that as well. But in purely financial terms, how beneficial is this transaction for our economy and the banking system? The total transaction, I was in April in Washington. We had a meeting with International Analytics and the companies who are very active in Armenian treasury bills market, Merrill Lynch and other reputable ones. Everyone unanimously claimed this was a positive transaction. That's one. As for the price, we do not comment on the price because it's two businesses at arm's length striking the deal. The central bank has no powers to recommend a price. If there are two business groups with different sets of investors, including international investors on both sides, strike a deal and arrive an agreement about the price, that means this is a fair price as of that point in time, considering the available information, financial flows and whatnot. As for the third question, I don't think it's serious. I won't comment. There have been. This is a London-listed company at the London Stock Exchange. The parent company of BOG. There's more Goldman Sachs, Morgan Stanley, groups of investors who are de facto also shareholders now here in Armenia. We scrutinized the list of investors at the level that interested us. May Azeri buy a share of a London-listed company, or an Armenian can an Armenian buy an Azeri London-listed company's share? But the question is whether buying a share is one thing, impacting decision making is another. We haven't seen those shares being in any substantive quantity, and there is no impact on decision making whatsoever. Let me remind you that it coincided, although it was with Ruben Vartanyan being jailed in Baku. The media drew those links. They said maybe Azerbaijan dictated the transaction. Are you aware of why the board of Ameria decided to sell it to Bank of Georgia? I have information, and comparing it with other data, I can tell you that these two are absolutely unrelated processes. The sale transaction was initiated long before what you just referred to. So what's the business rationale of selling Ameria Bank? It seemed that it was one of the most successful projects in the banking sector. I cannot tell what their motives were. They just informed us they want to sell. I'm not aware of their motives. But the decision preceded the events that you refer to, jailing in Baku, and the HSBC transaction is off. The HSBC transaction, a bank has applied to us who intends and tries to purchase HSBC. We're now still studying the details. Is there any risk for a given country if foreign banks get too much involved with the local market or sell domestic banks to major internationals? Is it not better if there is more local resident banks with more shares by the local residents? Is it not more beneficial for the country? You have to look at several factors. The banking business is becoming more local. You will see that HSBC, Citi and other major groups who were attempting to become globally present are now switching to more local strategies. HSBC is returning to the haven where it started with. It left about 20 countries and Armenia is one. They took the strategic decision to get back to their cradle, and Citi does the same. They optimize their businesses. So the banks are becoming more local. The presence of international banks, if you want my opinion, is very important for any economy. Like we say, FDI is good. Of course FDI is good. It's not the money in as much as culture, knowledge and capacity. These are the factors of change. When in 1996 HSBC entered Armenia, I believe it was very beneficial in changing a lot in Armenian banking industry, in culture, in decision making, in civilizational influence. After all, a citizen of Armenia entrusts his or her funds to foreign banks, and tomorrow, the day after, for just about any reason, the same HSBC may encounter problems, get busted, or in view of certain geopolitical factors they may dispose of, which is why there is the Central Bank of Armenia, which apart from policy development is also doing supervision. So all of the banks in here are well capitalized and liquid. We are watching over the banks so that an Armenian citizen depositing in those banks or entrusting them with his or her funds is safe and secure. That's why we're here. And Ameria Bank, I don't know whether it's within your functions or not. Is there any rebranding to be expected, or a shift in their policy or style? I'm an Ameria client myself. All of my billions are entrusted to it, and it crossed my mind in view of media news to withdraw and move my funds to another banks. Is there such a trend visible where people detecting that Ameria was sold, withdrawing their deposits? According to the information we have access to, the brand Ameria will stay. The new owners have struck an agreement with the management which will stay put, so this business style will stay the same, but the opportunities of carrying out transactions will significantly increase. There will be a positive fallout. It's a London Stock Exchange listed company. That's a different ball game. So we have no reason for concerns at this point. As for your personal decision, I have no comment about it. So where you place your billions, what matters is for them to stay in our banking system, and we guarantee that we adequately supervise. Thank you.